You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
My issue was really probably a little bit of ego and thinking that I knew what the hell I was doing when clearly I didn't. And the main issue I had was property analysis. And I really didn't know how to run the numbers as well as I thought I did. And that left me in the hole. I was pulling out almost $250, $300 a month out of my pocket, which is financially harrowing, but also emotionally it takes a toll. And so that was probably the biggest one. Didn't really have any property management tenant problems, that type of thing. It was really the upfront type of issues. And of course, not working with the right people. I didn't have the right mortgage broker. He was just a regular guy and I thought it was good. You know, the real estate agent, well, just a regular agent. Had I been working with the right team, I would like to think that they would have told me, Tony, this deal sucks, don't buy it. You'll regret it.
Yeah, absolutely. You know, I made similar mistakes when I first started. I was using a realtor that was from Oakville to help me into Brantford, which is like an hour away, totally different markets. And I was going to the bank directly instead of working with a proper mortgage broker that had to untangle my mess that I made when I first started working with her. Thank God, it was only 3 properties in, but similar mistakes. So how do you analyze a property nowadays?
It depends on the type of property and what we're looking at. So there are some people who are looking for just a straight up freehold townhome. That's pretty straightforward. You know, it's just knowing the market value and if somebody's looking for just a long-term buy and hold, well, you sort of analyze it differently and look at the numbers differently and pass on that information to the client. There's probably less risk, especially in Ottawa when we're talking about long-term buy and hold, because I'll say it's the most stable city in Ottawa just because of 160,000 federal government jobs. But in terms of analysis, I think the biggest challenge, I think it comes back to multifamily commercial is probably, 5 doors plus are probably the hardest ones to analyze for people or for buyers and to show them how. And what's interesting though, I find also, is that it's even sometimes more difficult working with sellers who have realtors who aren't familiar with selling or listing a commercial property. Because we'll send in an offer that has, right, if you're buying like a 16, 30 unit building, whatever it is, those offers are very much different and structured differently compared to just a regular one.
Absolutely. And the other thing that just drives me crazy sometimes is when the realtor just puts as expenses, everything except for everything you need, like no maintenance. Where's the maintenance? Where is any of that stuff, right? And so they're like, here is the maintenance that we spent, and it's like snow removal or something like so small. I'm like, well, what about everything else? Or sometimes it doesn't have anything on there. In the listing,
right? In the listing sheet, you mean?
Yeah.
Yeah. I always tell people that's just the starting point and disregard. Think of it's all garbage in there because either people are too lazy to fill them out properly, or maybe the sellers don't want to give up that information at the time. So that can be challenging, but it's really sometimes, in terms of analysis, it really can be a challenge because the seller hasn't provided enough information. It really can be. It can be tough. And even if you have a deal locked up or you not firmed up, but under contract, sometimes the seller doesn't give you everything you need to properly analyze and conduct your due diligence. And sometimes it's like pulling teeth. Yeah.
In terms of I would say both sellers and buyers, and I don't care where you are, it really is all about education, right? Because I think that for people who don't really understand real estate investing, there's a lot of misinformation, disinformation, just bad information.
It
right?
is bad. Yeah.
It's just bad. bad. And it's like, oh my God, that property you have, well, just because your neighbor told you it was worth $750,000 does not mean it's worth $750,000. You really need to dive deep and get the proper assistance and go to realtors and mortgage brokers and people who really understand not just the general market, but your market, and understand what kind of real estate investment you're after.
Right. It's really important when I really recommend that when I'm working with someone who's buying their first multifamily commercial property, that they hire a coach. They hire someone who knows how to do everything and walk them through. Because I'm not a coach, right? I can walk them through and I can tell them about the market. I can do a bunch of things, but I don't consider myself a coach and I don't want to be one. So it's really important that they learn from an expert, whether it's Pierre Palter, Jean-Nic Legault here in Ottawa, somebody who has that experience to bring forth. It's really important. So yeah, getting a coach is good. Sometimes though, I have to admit though, Sarah, sometimes a coach can interfere with the progress of a deal, especially a coach who is in a different city or a different area. Like you said, Laurel, so if the coach isn't from the city or from where the person is investing, they may not have all the information as to what's going on in the city and vacancy rates and the real estate trends and what's going on. Does that make sense?
Yeah, no, absolutely. It's really quite interesting. And I look at the Ottawa market, and investors seem to be very happy with the market. And when I was looking at different reports, Ottawa's up there in terms of the best markets to invest in coming up. Let's talk about some of those fundamentals. And I think that piece is important because...
Would that be that one, Sarah?
Yes.
Yes.
So for those of you that are listening, you're holding up an Acre book.
That's right.
So talk to us.
I automatically thought it was video.
No, that's okay. It is going to be on YouTube as well. So some people will be watching it on YouTube.
Okay.
So what are some of the Ottawa fundamentals that you can share?
Oh, well, I think let's see jobs, because we already talked about jobs, federal government jobs, roughly 160,000 of them in the city of Ottawa, not counting on the Gatineau side, by the way, across the river. So these jobs are well paying and they're not going to go anywhere anytime soon. If anything, the number of people working for the federal government service in Ottawa will continue to increase. So when you have rent due and you're renting to a civil servant, well, you're pretty well guaranteed to have that money unless they're bad tenants. Like they had the money to pay the rent, in other words, and to handle rent increases. Number two is we look at the high-tech sector here in Ottawa, in Canada. It's a booming high-tech sector. What's the number? I read it earlier. I'm going to say 43,000 jobs, if I'm not mistaken. I'd have to double check, but a lot. And many of those are moving into the downtown core as well. So we have those two. Then let's move to transportation. Everybody likes light rail transit. So Ottawa has its light rail transit going. Some days better than others, but it is sort of operational. So that's a big thing. Population growth is, I think Ottawa is number two second biggest growth, I think, tied with London this past year in 2019 for population growth. So, and then you look at finally other things such as, is the city landlord friendly? And I used to go out there and say, yeah, man, Ottawa's great. We can do all these things. We can, they're really helpful with secondary suites. And, if we want to convert 2 to 4 units, that type of thing. But now I have to put a little red X there and say they're not as friendly as, the city's not as friendly to landlords as they used to be. But take that aside, the fundamentals are there. They're really good. And we're seeing home prices continue to rise. They're still going up. Vacancy rate, the overall vacancy rate is somewhere below 1. Forget about the CMHC reports that are 6, 7, 8 months old, or their data is old, I should say. Rents where they were stagnant for a few years, way back when, for example, you had a 3-bedroom townhome and you might be able to rent it for $1,300, $1,400, maybe get some utilities tied in there. Now those are going for $1,800, $1,850 plus utilities. So we're seeing those rents rise and actually starting to catch up somewhat to the home prices, right? Where before the properties wouldn't cash flow because the rents were too low, but now they're starting to, catch up. Not everywhere, but they're doing better.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.